Today's episode: how to overcome the fear of investing in the stock market. So, pretty much how I got started. Um, I'm going on year two for me. Um, and my journey started, I started investing on June 5th, 2018. So, I'm fairly new at this, but going into my second year, like each year, you start to develop like your mentality on how to invest in concepts. Because I think the number one thing that I learned since that time is pretty much how to not be like stressed out. Everybody has their different styles, but I came into this game because it's cool to invest, and I see how a lot of investors they pick their 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 companies, their stock, and then they just add to it. I don't know. I feel like when I saw that it was cool, I could have done it, but it didn't feel fulfilling. Yeah, I know the compound interest is there, but also the compound interest is in the market. Once you start investing in the market, no matter what, then you're already playing the game. You're playing the compound interest game. So that's why I say this is the eighth wonder of the world. Once you put your first investment in, that's it. You're in. You might as well play the game. And me being wanting to be a business owner, I've had like over my lifetime over 10 businesses. All of them failed, and now um, you know I'm feeling like in a stage where it just felt like I want to give up, but it's just I just have a passion for this business. So once I started getting into um, investing with Robinhood for the very first time back in January, I mean it's the most scariest thing in the world. Oh man, it was scary. It was because it's just that fear. That fear we're taught that to lose something, especially when it's money, that is. And then when to me, I had to learn to. The way I learned to invest, what hit me is like when I first learned how to ride a bicycle. I did that, but then I started to ride my bicycle with no hands. Started to balance it that way. Then I was getting so good at it that I would get on a 10 speed, like on a straightaway road, and I'd go real fast on a 10 speed. I was doing this on regular bikes, but there's something about a 10 speed because it was slimmer and the way it, the gravity and it was a beautiful, it was something so beautiful that I remember as a kid. So I was going, I was going real fast on a 10 speed. This was a 10 speed. So I got on top of the 10 speed and I just did this, balanced myself on the bar with the 10 speed. This was a kid. I was like 8 or 9. I was living in North Dakota. Yes, it's North Minot Air Force Base, North Dakota. I learned all these tricks because I didn't have a father, so I had to teach myself everything. I taught myself in the streets, with bumps, bruises, and black eyes, and everything. That's how I became a man and how I started learning about life and how I've tried every business that, especially as a kid. Then when you get older, it gets warped a lot. I wish I knew this like coming up. So I mean that's the thing like with Warren Buffett. I think because at a young age he caught the concept. Like I remember going through it, but it was a fear. It was always a fear. But once you get over this fear, then it's just like you're flying, and that's how I relate that bicycle story with this. So pretty much, I'm at a point where I'm on the stock market like this, whether it goes up or down. I'm balanced. I'm on it. I'm on the stock market balancing because of the mindset that I have, and I'm a sector investor. So I go and invest. My thing first is I'm building a foundation. So this is pretty much something that I'm putting together that I feel that because a lot of people they always talk about risk, but my thing is the way this style of investing will cover you through all the sectors. So you'll have the tech sector, you'll have the water sector, the meat sector. I have 50 of them that I break them down where you can understand it clearly and you can see the companies versus, you get Wall Street. I mean, the jargon that they have now that they use, which is consumer good, discretionary products, and to me, it's just there's no clarity in that. I understand. It's just to me it's more vague, and I started just to dive deep more into it. Like I got a waste management sector, pharmaceutical sector, finance, bank, global banking. And I'm also investing in companies overseas, especially the five biggest companies, which are part of the SDR, which is the one world currency with the IMF, International Monetary Fund, the dollar, of course. Um, we have the British pound. You have the Japanese yen, the euro, and then the newest addition is the Chinese renminbi. People are like, "Yo, how's China blowing up?" Because they're part of the IMF. So now they're in that circle where everybody's helping each other. Like if that country is low, they're gonna borrow from the remaining four, and vice versa with everybody else. So, and that's how I see it. And then I discovered that there's ETFs, currency ETFs, like you know, with the British pound, with the euro, with the Japanese yen, and then with the Chinese yuan renminbi. Um, so I'm starting to. I got a new category within my index funds. Um, Pretty much my strategy for 29 is 60% stocks, 30% index funds, and then 10% REITs. So that's my strategy for 2019, just to see how I build um, my strategy. Pretty much stocks. I mean, those are your growth. That's where your money is really going to grow in stocks. And the reason why I put in 30% index funds because it's pretty much that's like a safe haven. It's like it's gonna catch you. It's gonna soften. It's gonna soften the blows or the downward turns when you have those index funds because there's just more majority instead of you just holding you just individual stocks. You know, there's nothing like and they're gonna go through the cycles. So that's what I'm learning now. The concept of stock market cycles. So when I see it, I'm like, okay, I recognize it, so I understand. But that me being a sector investor, um, I pretty much chose that ratio and just to seeing how my portfolio is doing. And as you can see, I always go to all. I don't go. I'm not a day trade. I'm not a day trader or swing trader, so I don't look at all. I'm not concerned with all these. I just go to straight to the all, my overall, and I'm at 7.65. Now, if you're making 7 to 10% a year on your money, I mean, you're not gonna get that nowhere else. And me, from multiple businesses that haven't failed from to doing this, because I'm still gonna start my own business. I'm gonna get into trucking, so I'm gonna get my truck, hire a driver, and then get into the game through this just to learn. Like I even have my transportation sector. Let me show you real quick because this stuff is interesting. I got okay, the transportation sector. Now, these are all companies that I plan on investing in. Um, what I'm gonna do first, before I open up my trucking business, I'm gonna own one share of Huntington Ingalls, FedEx, Old Dominion Freight Line, Union Pacific, Landstar System, JB Hunt, UPS, Royal Caribbean, XPO Logistics, Canadian National Railway, Saya, Ryder, Westinghouse, Forward Air, PACCAR, Carnival, PAM Transport, Norwegian Cruise Line, Hub Group, Werner, um, Knight Swift Transportation, Park Ohio, Pembini, Deutsche Post, Convenant Transport, Schneider National, USA Truck, Marshall Transport, Heartland Express, Bluebird, Patriot Transportation, YRC, Desaki, U.S. Express, Nordic American Tankers, and then Roadrunner. So a majority of those are pretty much semis, semi truck companies, and then they're in the business of products. And then I don't know if you heard me say like Royal Caribbean, um, Carnival. those are pretty much in the business of transporting of people. So I put that in there in my transportation sector. So pretty much what I'm doing now is I'm doing everything going back to the basics, just learning the fundamentals. So I told myself, okay, once I get all these companies, uh, and once I get this sector locked down and I feel comfortable with it, I'm gonna invest in my first truck. So, but I gotta push myself to get this first. So, um, and then I'm gonna start with 10K. So once I get 10K and these all owned, then I'm gonna jump into it, buy my truck. So, and that's my motivation for um, owning a business now. That I'm now I got it for this is gonna be the 11th time um, going for a business, and this time I've had all these mistakes, so I'm ready now. So now I'm more observant. I'm more patient with it. So a lot of the stuff I think it was me due to I didn't want to put in the work. It was you gotta. It's just something mentally you gotta just learn to. It's a habit that once you it's just if you don't have the habit to perform, you're not gonna perform. It's just like me going to the gym every I go to the gym Wednesday through Sunday, 5 days, and it's like now it's a habit. It's just like automatic. And if I'm gonna perform, I gotta show up every day. So that's how I'm thinking about like starting a business. Like you have to be in and you got to be really dedicated to it, and you got to understand like how it really works in your product and your audience. That's what I'm learning now, and I'm taking a social media. Hold on. And they're teaching me a lot. It's a crowdfunding and social media marketing class at the AAU. I'm currently taking two online classes and then um, two in the city. So art history and then emerging technologies and editing. So interesting. This is interesting stuff. Just being educated um, on that. So and that's pretty much like I just want to talk to you guys about just overcoming your fear of it. You know, um, I started out about 2 shares of Nike, 2 shares of Sony, and 2 shares of Coca Cola. And you see, as you can see, there's only twos in there. See, Nike, I got two. Coca Cola, I got two, and then Sony, I got two. That's how I first started. And then after that, because I was gonna start just start adding to them, adding to my positions. But it didn't. I felt like, man, this is it. You know, it just felt boring to me. So that's when I got into like more exploring the sectors. Oh man, waiting until I come out with these sectors. Oh man, I mean, I got 50 of them, and then the index funds they have within the index funds, um, they have their sectors. So I mean, the way it's broken down and it's just so crystal clear to my mind. I'm like, oh shit, I got this game figured out. Um, with index funds, there's pretty much the three largest index funds to invest from are iShares, SPDR, and S&P, and then Vanguard. Those three, you buy their ETFs, you're good. You're good, and then they paying nice dividends, beautiful dividends, quarterly though, every 3 months. So, and my strategy for my um, hold on, let me finish with this index funds, and then after that, it's broken down into um, sectors, precious metals ETFs within the index fund, then the currency ETFs, and then buyback ETFs, and then lastly bonds ETF. So one, two, three, four. So I got four sectors within the other three big ones that I can start investing in those ETFs. And then REITs, pretty much the REITs are known for monthly dividends. So I plan on with me waiting because 2 months is 2 months. That's a little bit of wait. Like in that time, I could purchase a company here and there with the dividends from REITs. So with the REITs, I'll be able to purchase companies and then build even faster. So when I hit the three, I'm definitely gonna um, invest. Because with the dividends, I'll either buy a stock, um, ETF, or another REIT. So it just depends on like what's um, at that moment what's the right price for the dividends. Because right now I just started getting $10, and I went and bought two companies with that. So um, so I was like, oh shit, I like this concept. It's just a different mentality. So and then I learned to have reserves now. So um, I'll just I'll just each month I'll just leave $100 and let it stack because I want to get Amazon. I want to get the Fang, own all the Fang. I got Facebook. I got Apple, FAN, Netflix. I think it's two N's. Oh, the F is Facebook, A is Apple, and then the other A is Amazon, and that's the one that I'm gunning for. But right now it's too high, so I'm waiting for it to shoot back down. You know, probably 11, 12. So I'll be ready for it when it goes back down, whenever it does. So I'll catch that, and then FAAN net I got Netflix, and then G I got Google. So it's like a little collections too to collect. Like there's even an airline sector. There's a supermarket sector. There's a home improvement sector. I got a fashion sector. I have a holding company sector. I mean, the companies in there are just like wow. It's um, to me it's exciting. Just to invest in that way because now I'm starting to push myself to learn more about other companies that I would never have thought of. It forces you when you have them. Pretty much as you can see, um, I have 95. I had 95 assets under management, and it ranges from 1,200 all the way down, and they're ordered by valuation from highest to lowest, and it shoots all the way. And these are all companies, ETFs, and REITs all mixed in here, and then all the way down to 50 cents. So pretty much, you see a lot of these companies under $10. Those were bought by dividends. But man, just to get $100 in dividends and me be able to pick out one of these companies for $100, because you look at these $100 companies like um, Waste Management, P&G, Procter and Gamble, Disney, Microsoft, PNC, that's a bank, United Technologies, Johnson and Johnson, IBM, Visa. This is General Dynamics, Facebook, Baidu, McDonald's. You see all those 100, like those, But I got to work at it with my strategy that I have, and that's why um, I've incorporated the REITs to try to try to get some leeway in those 2 months before I hit those quarters. And then also I started playing with cryptocurrency. Oh wow, this jumped up. See, and I slipped on Bitcoin. Bitcoin was like 3,900. Okay, the thing with this, it's 24/7. This market never sleeps right here. This never sleeps. Uh, this stocks they sleep Saturdays and Sunday, or they party or whatever. Yeah, they party Saturdays and Sunday, and they come back to work on Mondays. But these guys, 24/7, and I plan on putting just $10 in each, buying $10 worth. It's more of a fraction. I'm not gonna go and pay the whole full price. With these, you can pretty much buy them like in fractions, kind of like the M1 concept. So even though I'm not M1, I'm um, Robinhood all the way. It has taught me the game. Plus, YouTubers. Shout out to all YouTubers for the motivation, because they pretty much, they're. I've been watching them like the Plain Bagel, um, uh, Jake Jones, um, Lydia, Santiago. I came up with those people, when I didn't know nobody. Those, and they're young, so it inspired me. I'm like, oh shit, okay, let me get to work. So, especially with my age, I'm a late bloomer. I'm 40, so all my years I've known about it. Always been a curious person, but I never never took action because of fear. That's why I'm teaching you guys, yo, get over the fear. Because once, especially if you're young, holy shit, I can't wait to get my son on this, but he's 11. So my wife is always saying he's too young, he's just a kid. Now you start teaching them now, so once they get into that age, they're already gonna be ready to rock and roll. And it's nothing like it's gonna, nobody's. I mean, they're learning what they're learning in school, but this is like personal stuff that as parents, you teach your kids, outside of school, because that's where they get that the real reality knowledge. There is just pretty. It's like a facade. But getting back to cryptocurrency, um, yeah, Bitcoin was at 3,900. I was gonna put in $10. See, but the fear, if the fear had got to me, and now I missed the boat. So that $10, it would have jumped up to about $30. I would have took out 20 and then bought some stock or an ETF or a REIT. So you can play the cryptocurrency game with Robinhood. People are sleeping on Robinhood. Like, that's why people are just, you know, turn it, running for the hills. I mean, this is. What do you guys think? You think that they're gonna keep on with this old? Everything goes up obsolete. Anything new comes out, like these guys are the new Top Gun. The Mavericks, the Goose, the Iceman. This is the new Top Gun. So, and I'm not selling the house or nothing like that. Nothing crazy. I'm just testing it. And check this out. This is my Ethereum Classic. Look at the jump. 70%. I'm up $3. See what I'm saying? And that's just one. I just bought one for. I mean, my average cost is 483. Look how it just doubled like that. You know, because I could take. I mean, if it goes up, I'm taking out to buy stocks with it. That's it was just this is just play. And I got one. I'm not gonna. I'm just gonna take the profits from it and then just scoot it into the um my my buying power, so I could just use that and buy more stocks, more bonds, more index funds, more REITs. That's it. So that's the crypto game. Damn, that's the first time it jumped like that. I want to see what the Dogecoin is looking like. Oh man, I just see, and that's why. Oh, fear. God, fear. Why didn't it go into Dogecoin? Okay, Dodge. Okay, they're up 63%, up 1.2. So, and that's 900. I got 956 of those bad boys. Something fun. This is fun. And I mean, really, the name of the game is compound interest. So, but that's how you get over the fear of investing in the stock market. Now, show your support by subscribing. Comment any questions or recommendations you have. Hit the like button and share this information with curious friends and family members. Until next time, let your compound interests speak for you. Alexa, smile.
Sure, I smile all the time.